Hello, I'm Liz Lumley, and this is Finextra at Sibos, and I'm speaking to Satvinder Singh of Deutsche Bank. Now, Satvinder, you're speaking at the conference this year about reinventing the custody model. Can you give us a bit of a preview of that?
I think it's really important to take a step back and say, does the model need reinventing? And a lot of people will say, actually, no, it doesn't. My view is absolutely it does. And the reasons why it needs reinventing are pretty simple. The pressure on the fee pool is tremendous. So interest rates compression continues, fee compression continues, FX margins continue to narrow, and they're rightly so more transparent. And then you look at where some of the markets are going. So the assets under custody in a lot of the emerging markets have been dropping, the markets haven't been performing well. Volumes in some markets have been trending upwards, but generally have been flat. So you look at that background and say, if that's what's going to continue going forward, clearly something needs to give. The model needs to change, the relevance to the industry needs to happen, or custodians will make a decision whether or not they need to stay in this business. So we've seen one example in Eastern Europe of a provider deciding to exit, and consolidation that we've always talked about in the industry is beginning to happen. My view is fundamentally we need to reinvent ourselves, we need to be better aligned from a client perspective, and we need some long-term thinking in this business because the dark clouds are there and they will continue.
So what are some of the regulatory and infrastructure changes that are most going to disrupt this custody model then?
The one that's topical, and we're going to spend a lot of time talking about it, and we always have in conferences, is T2S. But I think we've reached a stage with T2S that's around the corner. So whether it's 15, 16 or 17, I think timeline-wise it's around the corner. A lot of institutions are making up their minds in terms of what the world post-T2S looks like for them. A lot of custodians are looking at their T2S solutioning and saying, do I give all the functionality that a client wants? What sort of clients am I catering to? What does open architecture really mean? How does this fit in with my long-term strategy? And remember, T2S isn't something you can just do by accident. You need to invest. The market needs to invest, and there's a number doing the rounds as to how expensive this is going to be from a market perspective. And there's a number doing the rounds for the various custodians and security services providers as to what each needs to invest to stay relevant. So when you do that, you've got to have a long-term horizon and say, I'm willing to invest X, but I know, given where the market's going to go, that will help the institution get more market share in a post-T2S environment. So T2S right on top of the list, but if you broaden it out, there's FATCA, there's AIFMD, there's AML compliance issues, there's KYC. There's a whole host of things that are impacting the securities and cash industry, which we need to stay absolutely on top of. There was a panel, I think, in Warsaw at NEMA conference where somebody threw up a number and said the cost of compliance to US regulations is something in the tune of 50-odd billion. And that's, whether that number is right or wrong, the magnitude of that number makes you sit up and say, if that's what the industry is going to be spending, you've got to make sure you're spending it wisely. One, to ensure that the existing client base continues to grow with you, and two, you're investing in a way that you're attracting new client flows coming through. So staying relevant is very important.
I mean, I'm really looking at the impact of to the client. You know, you mentioned T2S. You know, outside of global regulations, but in terms of European harmonization, there's a whole rash of regulations that are affecting the European market. How is this really going to affect your clients?
Every client is different, and you have a full range in the spectrum. Those who want to be advised and be told almost what that's going to happen and how it's going to impact them. To the other end of the spectrum, clients who are equally well plugged into the system, have representatives in the same committees that we have people in, are able to challenge us and challenge our thinking and help us come up with innovative solutions. So you've got the full spectrum, but a lot of clients, if you boil it down, have two predominant themes that they want to talk about from a regulatory perspective. First one, when is this happening? Why is it happening? And how does it impact me? And that's what I would say, we are the eyes and ears on the ground. We have the people who go to the local committees, the regional committees, and the global committees. That is what I would say is predominantly our role to advise. The second one is the more proactive one, which says, once we've understood this, help us understand how these changes are, as in the client proposition to their end clients. How does this make us more competitive or less competitive? Where do we need to spend a lot of our time? And how does this fit into your, as in the provider's strategy? I think that's really where the good conversation happens, where you're looking at regulation almost as an opportunity rather than a threat, and saying, okay, now that that's going to happen, this is what we're doing, this is how it impacts you, this is how you stay competitive, and this is how it'll help you.
So again this year, Deutsche Bank have put out a white paper looking at the themes of this year's Sibos. What are some of the most important ones?
So we've drilled it down to 3 core themes. The first one is what we've talked about, regulation. Regulation is there to stay, and regulation is always going to be topical. And we've spent some time talking about regulation, so I won't repeat myself. The second one we've talked about is operational excellence. You know, this whole notion of where the industry is going, how we're getting there, what sort of excellence needs to be transmitted from one client segment to the other, one region to the other, what we're all doing around it, how we're drawing efficiency out of the system, hugely important. And then we talked about flows between various regions and how, in my view, you know, in the good old days, you'd say innovation goes from west to east. That, in my mind, is completely changed. You have best practice and innovation coming out of Asia, as you do out of Europe, as you do out of the US or the Americas. And clients want that. Clients want a global organization that operates on a global platform, can give global products and solutions, and globally consistent. That's where our role fits in, having a broad network that covers all 3 regions. So we cover the Asias, we cover EMEA, we cover the Americas. Being able to provide that to our global clients, hugely important. And this Sibos is really about making decisions as well, right?
I think that west to east mentality is long.
Yeah, it has to go. Yeah, it has to go, because we've seen lots of, and they're not exceptions, now it's the norm. So a few years back, you'd pick up the odd thing that happened in Singapore or Hong Kong and said, you know, that's the exception of best practice emanating from the region. Now I see lots of examples. So in my mind, all 3 regions originate and emanate best practice.
So what are some of the other important themes?
As we said, regulation, but also being careful about how you're investing. One of the things we spoke about earlier was the need to invest in the business. But again, balancing that.
Yeah, I think that's a really difficult challenge to sort of balance investment in compliance with investment in innovative products.
I think you just said it absolutely right. You have compliance on one side, you have the need to innovate on the other hand, but we can't do everything. And getting that balance right as to which projects, which initiatives, which products we will be investing in, and at the same time making some tough choices around the ones we're not investing in. But being able to communicate to the clients so that they understand what our strategy is, short, medium and long term. They understand how our investments fall into that strategy, and therefore our ability to make those decisions is absolutely transparent. So they know we're committed, even though we're putting the foot on the accelerator for certain products and maybe not on the others.